You might think that with over 70% of ADA being staked on the blockchain, that this is the reason why the price of ADA is staying so strong. By strong, I mean that Cardano has objectively outperformed the competition over the last few weeks in what has really been a crazy market. Having over 70% of tokens locked up in staking, though, isn't the reason. Even though over 70% of the free float in ADA is locked up, that doesn't make any difference to the market price. It's the supply and demand of buyers and sellers of the coins in the open market that determines the price. Even if a tiny percentage of the entire amount of coins available is actually traded, it doesn't mean that because users are holding, the price goes up. That is a fallacy. Open market traders can just as easily sell as buy, and a smaller float of coins to trade can indeed mean that the price becomes more volatile, meaning it can move up and down in price more erratically, but it has no effect on the direction of that move. So what does this mean? Well, it means that despite a crazy few weeks in the crypto markets with, let's face it, some ridiculous moves, there is a definite demand for ADA. It has fared better than all the other top 10 assets. ADA, often mocked during the huge bull run at the start of this year as a stablecoin, is showing just how stable it can be, at least for now. So why is there potential demand for ADA coins at the moment? Here's my top 3 macro reasons. The big storyline for Cardano in the summer of 2021 is smart contracts, the thing that will actually deliver incredible value for Cardano holders and the blockchain itself. Smart contracts are the thing that allow for decentralized finance to take place. Without smart contracts, you really don't have much when it comes to these modern proof of stake blockchains. We already have the store of value when it comes to Bitcoin, where you can send transactions to each other, but with decentralized finance, as we all know, the sky is the limit when it comes to lending and borrowing, NFTs, and many other applications. The reason we are seeing so much buying pressure into Cardano right now is because they are delivering on their promises finally after years of research and peer-reviewed papers. Smart contracts are now being run on something called Alonzo. Alonzo, in relation to Cardano, is actually a test net. A test net is something that developers can use to test out all of their code and see if there are any issues or if everything is going well. There will actually be 3 phases in the Alonzo testnet era, and you can see them here laid out by Cardano themselves. You have the first testnet or the alpha testnet, and this is Alonzo Blue. And then in the next few months, they will go on to Alonzo White and Alonzo Purple. These are simply just different stages of the Alonzo testnet, so getting more developers in and getting more smart contracts on the platform to test. We can see exactly the roadmap that Cardano has. We are in this era right now, the Goguen smart contracts era, and they're testing everything right now. We know from Charles Hoskinson and IOHK themselves that the end of summer will be the launch date when potentially these smart contracts actually go live. That is not far away, only a few months, and so you have a lot of people now buying in anticipation of this launch. What's so different about ADA and smart contracts though that Ethereum doesn't already have? Well, they do use a different programming language called Haskell, and developers have said that they do prefer this. The language has been around for a very long time, and it's seen by developers anyway as a simple language that they have a lot of experience with already, and so it's easier to develop for the Cardano blockchain. Cardano also say that their smart contracts are more secure, although of course this is all relative. There is a lot of value in smart contracts, and so it's an exciting time, but what really does interest me is something called an ERC20 converter, which we'll talk about in a second. ERC20 tokens are the tokens found on the Ethereum network. Cardano will be, at some stage, including a converter to allow ERC20 tokens from the Ethereum blockchain to run on Cardano. And this is absolutely huge news for a number of reasons. The vast majority of DeFi and tokens that you will know are actually built on Ethereum and their ERC20 token standard. ERC20 tokens are actually built on Ethereum using a smart contract. Cardano is very different though. Cardano actually lets tokens to be launched natively on the blockchain, and so when you launch a token, you don't need a smart contract, you launch it natively, which means that potentially there'll be less bugs and potential hacks to the coins. However, as we know, Ethereum is without a doubt the largest blockchain ecosystem for decentralized finance and has a lot of value locked. Well, how about Cardano actually enabling everyone that has an ERC20 token, not just developers and projects, but you and me and investors to actually convert their ERC20 tokens over to trading on Cardano, a blockchain with lower transaction fees. How exactly will the ERC20 converter work then? Well, if you've had many tokens in the past, you might know that there are various tokens that you can wrap or put on different blockchains. One of the best examples of this is wrapped Bitcoin. Wrapped Bitcoin is an ERC20 token that is on the Ethereum blockchain, but of course being a Bitcoin wrap, it essentially follows the price of Bitcoin. Wrapped Bitcoin is so popular that it is the 18th largest cryptocurrency in the space. Why would anyone want to take their Bitcoin and then create a wrapped version, a derivative version, and put it on the Ethereum network? Well, very simple. Ethereum, because of smart contracts, allows for decentralized finance. You can take the value of your Bitcoin, create a derivative like wrapped Bitcoin, and then use the Ethereum blockchain to essentially loan out the value of your coin, potentially earn passive income and yield from your investment. The process of wrapping Bitcoin behind the scenes takes quite a lot of effort. What Cardano is attempting to do is essentially make this possible for every single ERC20 token out there. According to Cardano themselves, once this is live, users of supported Ethereum tokens will be able to move them from the Ethereum network to Cardano's. Smart contracts have grown in popularity since Ethereum's inception due to their utility in business transactions. ERC20 tokens address many needs, hence they have been widely adopted by wallets and exchanges. Yes, as we know, Ethereum is becoming more expensive, especially if you are transacting in smaller amounts. Paying $3 for a $100 transaction isn't the best. During a bull market in Ethereum, the fees can get to a few $100s, which is completely unacceptable for the likes of you and I sending smaller payments. This is important for everyone though. According to Cardano and on their IOHK blog, 45% of platforms built on Ethereum name scalability and high gas costs among the top 3 problems constraining mass DeFi adoption. This is exactly what Cardano is going for. Cardano can scale easier and also has low predictable fees. What Cardano are trying to do is essentially get all of those businesses that are using Ethereum right now to move right over to Cardano and start using their network and paying fees. Cardano are betting that if they provide a better product, a product that is secure, one that is enabled by a robust proof of stake, one that is predictable and has low fees, those businesses will choose Cardano over Ethereum. How exactly will the ERC20 converter work? Quite simply, once deployed, users of supported Ethereum tokens will be able to bring them over from Ethereum's congested network and take advantage of Cardano's transaction capacity and lower fees while enjoying enhanced security, reduced cost, and massively interoperability. According to Cardano, all you have to do to switch over an ERC20 token is essentially use one of their wallets, make a derivative on the Cardano blockchain where you can go ahead and trade the value of the tokens that you had on Ethereum. You can switch them into Cardano and you can also switch them back into Ethereum as and when you like. Let's get on to the third reason though why investors are looking at Cardano. It is interoperability, as I just said. One protocol building on Cardano right now is called Orion Protocol. Orion wants to bring one-stop crypto marketplaces to Cardano. Essentially what Orion wants to do is create an exchange aggregator. Yes, there are many out there. Well, what is different about Orion? According to Orion, scalability is of crucial importance to them in order to achieve widespread adoption. They want to become the single point of access to the digital asset market, and they need a robust, scalable infrastructure that can effectively and efficiently handle the transactions that occur on such a platform. Obviously, when it comes to exchanges, especially one that wants to aggregate both centralized and decentralized exchanges, you need a blockchain that can handle that amount of transactions without waiting around for orders to be executed and potentially getting a lot of slippage. It just can't work on Ethereum right now. It may in the future. Cardano are trying to get in and be first to the punch. Orion is just one such protocol hoping to take advantage of the fast, low-cost blockchain and also interoperability so that they can trade a variety of tokens all in one place. In any case, we can listen to this excerpt from the recent Cardano 360 that happened yesterday.
So how does Cardano fit into all of this? Well, for so long, blockchains have really been built in a vacuum. Dev teams have been creating their own protocols with their own consensus algorithms, validator pools, and custom applications. And while we talk about interoperability, as I said, the space is still really too siloed to evolve to a state of full interoperability without solutions that sit across the entire market from an asset, exchange, and blockchain level. And what Cardano is building is a blockchain that understands what's happening on other blockchains, working to become the internet of blockchains. What we need is the technology that allows what we're all building to communicate and interact, to finally break down these silos and bridge these chains to be able to achieve a seamless user experience and achieve widespread adoption.
What are the risks for Cardano and the market in general then? Well, as you've seen over the last few weeks, there have been some huge regulatory problems, a complete ban on cryptocurrency in China, which means that a lot of traders are just getting out of their positions and really forcing the market to go negative. If you know there are forced sellers, you're not going to bid up the price, that's for sure. Cardano, though, has fared better than the competition, falling in price over the last few weeks, but not as much as other coins. This could potentially be one of those instances where you have a lot of traders that are buying the rumor and will also attempt to sell the fact. So when smart contracts launch towards the end of summer, will they be trying to get a quick trade and sell out? Possibly. That is for traders, and long-term investors won't worry about this, but look for the long-term future and all of the new applications that are going to be built on Cardano over the next decade. But Cardano, much like many other blockchains right now, has an unbelievable amount of fundamental growth and adoption in its blockchain. If you haven't done already, you can check out Celsius Wallet and start earning some passive income on your Bitcoin and other cryptos. If you're in the States, earning up to 6%, and internationally, about 3.5% yield on your Bitcoin and even higher on many other cryptos. You can even get up to 8% on a bunch of stablecoins. And you can get a $40 BTC bonus with a deposit of $400 when you sign up to the app. And do subscribe for daily helpful crypto content, and I'll see you in the next one.